Hey, good morning. This is Mayor Valensky with Driving Markets. Hope you're well. Driving while talking about markets, but sometimes I'm stationary, so not necessarily driving. But the concept is driving markets, driving while talking about markets. That was the how I got the name. I thought was quite interesting because it's quite unique, driving markets. And I wanted to get it out there, I want to get published, I wanted media, I want broad audience, wider audience, more subscriptions, more comments, and I'd like to get this channel really successful if possible. And only with your help it can be done. Okay, so anything said in this piece is only an opinion only, as per usual. Let's kick off. So first of all, I'd like to just comment to my senior colleague Phil, who sent me a text last night, said he can't wait for driving markets today after the markets have gone up, because he's a big bull. Okay, so he's a big trader, and he was saying the markets are going to shoot up, and he got it absolutely spot on. Well done, Phil. Well done. I have to mention you on driving markets. Yes, you got it right, and your text message of 11:30 at night was you can't wait today for driving markets. This is your opportunity to gloat. You got it right, spot on. Well done. Okay, so this is now going to a little bit detail on what is kicking off and what is driving markets today. So the news is that the corporate earnings are better than expected, and that gave a big boost from last week and continued into a third day rally yesterday. And as long as corporate earnings are doing well, then obviously Wall Street and the analysts, the economists, believe there's not going to be any recession, which is fine. You know, they've been wrong the whole year, but I believe they're going to be wrong again because of what they've done. They've lowered the expectations of the corporate earnings to such a low level that you can't help but beat them. So any company that is not beating the corporate earnings really is in bad shape. And remember yesterday I mentioned that Altimeter Capital, which is a hedge fund in the States, wrote a very serious letter to Mark Zuckerberg and the board, telling him, for example, that Meta or Facebook needs to get its act together because it's going to go down, and they're just not happy with the price earnings ratios on the shares, etc., etc. And that's just an example. So even though the corporate earnings were good yesterday, I'm still of the view and strong opinion that we are going into a recession, and these companies are going to lay off huge numbers of staff in 2023. That's my view. I think it's all there's a delay, there's a lag, and I think that's what's going to happen. So you've got great corporate earnings now, which is again historical. Remember, there's a lagging indicator, and these are historical numbers from the last quarter. So a lot of the corporate companies have done well. Alphabet, which is Google, and Microsoft did not meet actual analyst expectations. They're huge, those two, and they failed on meeting their corporate projection earnings as far as the analysts were concerned, and they fell after hours. So my overall view that even though the markets have bounced, they bounced significantly. The Dow has jumped nearly, if I'm correct, I think it's nearly 8% since Friday. It's I got that right? I can't remember. Anyhow, so from last week, from the beginning of last week, it was down to 29,000. It's jumped all the way up to 31,800. That's a big jump. It's about 8%, something like that. So that's a big jump as far as the indices are concerned. The dollar was weak yesterday. It came off because obviously when equities go up, then investors sell the dollar and they get involved in other things. They bought the pound. The pound is at 114.5, and that's probably in the back of Rishi Sunak moving into number 10 Downing Street. I really like Rishi. He's a class act, and I think he will do very, very well as PM. They've got a hell of a challenge on their plate. Let's see if Rishi and Jeremy Hunt, the Chancellor of the Exchequer, can actually produce a budget that is acceptable to the public and also acceptable to global markets to make it more effective for driving the economy, etc. Bitcoin is a big news yesterday. Bitcoin jumped above 20,000 for the first time in 2 weeks. Let's see if we can get to 20,500, 21,000. Those are big tests. I don't think it will. I do believe that the markets are going to come off again, I'm a big bear. I believe the markets are going to go down. And I think what you've seen, it started off in China, which is a complete and utter property collapse, which is one of the major measures, or the major stance, the major pillars of the Chinese economy was the property market. That's completely and utterly disaster, and that's going to flow around the world. It's going to hit America and then Europe and the UK. So overall, I think interest rates will continue rising. Remember, the start of this rally started with the view that the Fed in the US will not raise rates, or will stop raising rates so aggressively, and there might be a 75 basis points in November and then maybe 50 basis points in December. They're saying that's it. I don't believe that it is it, but that's a view of the marketplace. So that's more or less a short driving markets today. Not really a huge amounts going on. Most of the news was based on the UK. That's already happened. Rishi's in number 10. That's history now. The question is, where do the global markets go from here? Well, it'd be interesting to see where the inflation numbers are at, because that is the main guide as to whether interest rates are going to go up any further. So again, well done, Phil. I've got to mention it. Yes, Phil, you did well. You were excellent. You got it right, spot on. Can't knock it. I want to make sure that everyone in driving markets knows that Phil in Barcelona got it right. Well done, Phil. This is May Valensky with Driving Markets. Driving while talking about markets. Subscribe, spread, comment, and also tell me what you want to hear about on driving markets, okay? I'm more than happy to mention it. Have a good day.